Joining us this morning, Allianz Chief Economic Advisor Mohamed El-Erian is with us. Mohamed, it's a treat for us to be able to get your take on the news of the day. I did read this morning that you feel that this news out of the Middle East is net maybe stagflationary. Does that explain some of the action in treasuries?
It is stagflationary. The question, Carl, is how stagflationary is it? And that's a function of what you just talked about. How many more attacks are we going to see from Israel? What will retaliation look like? So we don't know, but the direction of travel is clear. What's happening to Treasury is due to something else. The world is losing confidence in the sovereign side of the U.S. So if you're looking for safe haven flows, you won't find them in the Treasury market. Why? Because the world starts overweight the U.S. So there isn't much appetite to increase your overweight on the bond side. The other thing that's good for the equity market is you hear investors distinguishing between the sovereign side and the corporate side. And that's why the equity sell-off is not as big as you would have expected otherwise.
So those who are looking to either lighten up U.S. or hedge their U.S. weight, they're going to do it on the sovereign debt side as opposed to equities. Is that fair?
That's fair. They can't do it very quickly, because it's not clear where you go to. There's nothing to replace the U.S. But what you're seeing them do is go little by little to many places. The Financial Times had an article a couple of days ago. Gold now has surpassed the euro as the second largest component of central banks' international reserves. And that's a function of people looking to reduce their U.S. bond exposure.
But, I mean, we haven't really seen evidence of that, Mohamed, in the auctions. There's been plenty of demand for that. And when there's a weak economic report, people rush back into treasuries. And then, like I said earlier, you know, it's not like the European bonds are rallying right now. It's not. It could just be that the takeaway from this is that we might see higher inflationary pressure, as you said, and ultimately that's going to make it harder for the Fed to cut rates.
Yeah, I wouldn't look at the auctions too much because there's a lot of stuff maturing. So you really want to look at net holdings. That's what really matters. And the evidence is net holdings coming down. Also, Sarah, treasuries have decoupled from every single correlation that we used to rely on. You know, they sell off on a risk on day, they sell off on a risk off day. They sell off with the dollar stronger, they sell off with the dollar weaker. So what we're seeing is Treasury yields have become less predictable compared to what's happening elsewhere in the markets. What we're also seeing is gold has also broken its correlations, and its tend to goes up despite what's happening elsewhere. So I think if you look deeply, you would be worried, and that's part of a bigger issue, is that the global order relied on the U.S. right at the core of it. And what we are seeing are little pipes being built around the U.S. This is a very gradual fragmentation of the global order, but it's something we have to pay attention to.
Yeah, well, it's a significant statement to say that it's no longer seen as an absolute safe haven in times of turmoil, Mohamed. So I'm curious, though, what could change that dynamic or exacerbate it on the other side? I mean, the big, beautiful bill, not a good thing in your opinion? Is this a response as well to sort of the tariff regime and some hostility from other countries? What's behind it?
I think first, it's policy-induced volatility. That's something that the rest of the world isn't used to. The U.S. is supposed to be the most predictable player. The second is the extent to which the market-implied probability of recessions has gone all over the place. Remember, we started at the year with less than 10% market-implied probability of recession. We went up to over 70%. Now we're back below 30%. That's not supposed to happen for the largest economy with the most mature institution and the most dynamic private sector. People are paying attention to that. So what you need is more predictable policies, and you need the restoration of this trust in U.S. growth exceptionalism, which is something that has benefited not just the U.S., but the world.